Okay, hi traders, here's the video. First of all, the risk warning, your invested capital might be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another binary options trading, binary options strategy video based on those kind of concepts which I have explained in my ebook. Get this ebook, you'll find the link in the description. This ebook contains the most important, okay, I have to stop the video because I have opened the boturbotrader. Okay, I don't need to stop it. So, okay, yes, about those kind of concepts which I have explained in my ebook, concepts like market condition, trend identification, rejection, candlestick math, and a lot of more concepts which can be applied to any kind of time frame, any kind of broker, and any kind of financial instrument. So get this ebook, you'll find the link in the description, and in the description you will find also the link to the Facebook group. So we have weekend, you see here market is closed. And that means it's time to do this kind of binary option trading, binary option strategy videos, where I'm going to explain and show you those kind of trades which I have already done. And only because I do not have mostly the time to explain every kind of single concept in this kind of videos, yes, because it would interrupt my trading flow and every video would be too long if I would always the same thing, recovering always the same thing. Yes, that would be also really annoying. So only those one who are interested in this what can watch then this kind of weekend videos, which I'm doing only at weekend, because I'm as a European trader do not have the OTC market, and so I'm doing this kind of videos to to educate you better and telling you what you should aware about, what hints or what are the tricks and all those kind of stuff, and why I enter into a trade. So on the specific conditions, yes, because every trading opportunity and every trading setup is unique, yes, and that means that you should understand the concepts. And here we are coming to the topic, those concepts which I have explained in the ebook. But you should also understand that it is not done only by understanding a candlestick pattern, yes, or a trading setup. You have to understand all kind of concepts which I'm naming. Let me see if I can do this a little bit more faster than the last time. So the candlestick pattern should be always in your mind. Yes, you should know them all inside out. You should know to recognize them. That is important. Do this on the past chart. Yes, watch the past chart like I have done here. On the last video I showed you here, this is a bearish stick sandwich pattern. Yes, here you have an engulfing candle. That is what you should train. Yes, that is what you should train. You watch the EMAs, you watch the Bollinger Band, and then you watch for candlestick pattern. You know, yes, here a bearish pin bar. Yes, here we have engulfing candle, and you see here almost immediately nice trading setups. Yes, here we have a tower top. Yes. If you do some candlestick math, you see here a tower top. Yes, so you could expect that here the trend will continue. Here we have the highest probability trading setups. Yes, you see engulfing candle, next candle bearish. Yes, and after this you could do another put, because this candle would tell you that price would go down further. So you would have done this trade here too. Here bullish engulfing candle, a call option. Yes, and you can do this on the past chart. If you don't have the OTC market, yes, and I would say don't do this on the OTC market. Try to study almost on the live market, yes, or on the past charts. Here you see EURUSD, and you have so many charts, you can still get so many, and then you do this here. Evening star, 80% success rate, that price will continue. Yes, here you see a nice retracement, yes, and all those kinds of stuff. Evening star after this kind of nice hammer put, yes, and all those kind of things. Study those things. Take at least 1 hour every day to do this on the chart. That is the fastest possible opportunity to learn and to study how market behaves. Yes, because else you should wait all the time, yes, for the next candle, and that is not so effective like working on the past chart. Yes, you have the navigation, you have the sextant, yes, you know the EMAs, you have the EMAs based on this, and so you see how price is reacting here, and you see 1 million of opportunities, yes, and you can understand how price behaves at specific key levels. For example, like this one here. This is a nice opportunity. If you get this on higher time frame, that is opportunity to trade FX options. Yes, I will do soon another videos about this. If you get such kind of tower top here, yes, and that are also similar to the, you see that it's a double top also, yes, that is at the key level, you can trade this kind of trade here. Nice if you have this on the 1 hour time frame or the half an hour time frame, you get here a nice opportunity to trade, yes, and that is the same what you can do also on Forex, yes, but you have to recognize trading setup, you have to recognize candlestick pattern, chart pattern, and so on, spotting them on the chart, always on the past chart. That will improve your trading style dramatically if you do this at least for half an hour or an hour or 15 minutes only every day. Yes, the thing is you should do this often as possible. So, and I tell you, then you will see opportunities everywhere. Yes, and then you don't have the necessary to enter in opportunities, yes, which seem like opportunities, yes, but you know, okay, in 1, 2, 3, 5 minutes there will come up the next opportunity, yes, where I have better odds, yes, to survive or to get this trade in the money. So you see here ranging market, yes, nice lower shadow, nice reversal here, yes, that is also a nice trade here or here, yes, after this kind of weak candle, yes, you know, and this rejection here, amazing rejection, far away, yes, from the 200 EMA, here is time of reversal time, yes, here is reversal time, and that is what I'm trying to explain you in this kind of weekend videos when I'm talking about my concepts which I have explained in the ebook. So chart pattern, candlestick pattern, learn to recognize that, study already having charts, yeah, charts which already have passed, yes, study them, because also if you are doing higher time frame trades, yes, 5 minutes, 15 minutes, 1 hour, it's also if you are doing Forex, study the charts, yes, and try to spot opportunities based on the EMAs, based on the Bollinger Band, and based on the candlestick patterns, yes, because they will give you a hint how they should have been aligned, yes, how the Bollinger Band should look like to do this kind of trades. And more you do this, better your trading will be, yes. So, okay. And then obviously those candlestick patterns and chart patterns, then we are talking about the concepts, and here we have candlestick math. You see, I doing candlestick math always, yes. If I'm watching for higher time frame opportunities, I'm watching almost for the candlestick pattern. If I'm not sure if what price will go do, yes, I use candlestick patterns to confirm that what I'm expecting. Mostly I add 2-3 candles together, yes, that is really fast, opening price, closing price, wicks, yes, and you have the candlestick which happens, and that will give you a hint on the higher time frame where market will move on lower time frame, yes, that is really important. You should train this too, yes, it's the same like the ratio of the Fibonacci level. If you don't use the Fibonacci tool, you will not understand the ratios, and you will not never see that price is moving in this kind of ratio from only with your eyes, yes. You have always to apply this, and that is the same. If you don't use this, you don't apply this, you don't practice this, you will never see candlesticks math stuff together, yes. So it's the same like if you never saw a double top, yes, you will never see a double top, yes, you see everything else, you see the same what I have seen when I started blue and red candles, yes, nothing more. That was what I have seen when I started a lot of years ago. So, okay, then the stuff about the rejection, I get almost often the question again about the rejection, but I'm sick to talk about the rejection because the rejection is only a small part of the trading setup. If you choose the trend wrong, you choose the key level wrong, and you choose the candlestick pattern, not even the rejection will save you. So focus on the other parts. Yes, the rejection is only the last confirmation. Yes, that is the point on the E. Yes, so then market condition. I cannot even mention how important the market condition is. You see, trading setups are related to market condition. Yes, reversal trades, healthy trend, ranging market, continuation patterns. Yes, trending. Yes, that is what the rules are. It's so easy, but spotting them is difficult because markets can also change trend. Yes, can change really fast. And if you have spotted that there was a trend, price, the market is going in ranging. Yes, that can happen. So then obviously if you are using EMAs, what the alignment is, this is really beginner stuff here. But this minute trend stuff not, because the minute trend is almost important. If you have nice ranging market, you can trade the minute trend. That is really important, yes. And if you have the minute trend in favor of the major trend, yes, you will increase the odds of your trades. So fake breakout stuff are really important because a lot of traders will be hit by this, yes, because they do not understand that a fake breakout can happen. They think if a support and resistance level is broken, yes, then price will continue. No, that is not the reality. That is most the case when you got out of the money. Reversal and retracement, also a point where a lot of traders for overall beginners will get out of the money, yes, because they don't understand that the retracement or reversal should hold at least for one candle. If you have 1 minute expiration time, if you have 2 minute expiration time, it should hold 2 minutes. And you have to be sure that it will hold 2 minutes. That means you need at least a 3 candle trend before, yes, to get a 1 minute retracement. It's an overall number, yes. Don't fix this number and say, yes, no, next time I get a comment, the last time the trend was 3 candles, but the retracement was not even 1. Yes, that can happen too, yes. But the overall is 3 to 1, 4 to 1, yes, then you are always on the sure side, yes. That is what you should expect. You cannot expect that a reversal will hold longer or a retracement will hold longer than 1 candle if the previous trend was only 2 candles, yes. That is what you should have in your mind, yes. It can happen, yes, but then it is mostly not a retracement, it's mostly a consolidation area, and that is completely something else. So, okay, then we have the highest probability trading setup. I have shown you this. You can find or every 5 minutes, every 8 minutes, a good opportunity to do this kind of trend continuation stuff here, the high probability trading setups. And yes, and now we are going into a fast thing because I have explained again too much. Yes, then the support and resistance stuff, obviously. Yes, then obviously the concept about the support and resistance based on candlestick patterns, the progression of the candlesticks, yes, the power of the candlesticks by the real body, by the closing price of the candle in relation to the candle itself, and obviously the ratio between the upper and the lower shadow, and the relation between the shadow and the real body. So, and then the concepts which I have explained here about how to choose a trading setup, what you should do before this, and then the process of elimination here, yes, and the process how you trade the continuation, the next candle based on the previous candle, not unfolding like you expect, and then obviously the entry point, which I had shown you also in the last video, how important it is, yes, and then the movement of the candlestick itself in the purchase and expiration time. And there I explained also in the last video, you should understand that if you have the 1 minute time frame, you have 30 seconds per case and 30 seconds expiration time. If you have higher time frames, you have to divide this by half. Yes, that means if you have, for example, a 5 minute candlestick, versus for example, it's 5 minute candlestick, you can expect that the half time of the time the price will move in one direction and then the other half in the other direction. So market condition stuff, yes. what the EMAs are telling you, and all those kind of stuff. So, and I think that are those one which are the most important one. Watch the related videos. Try to apply those kind of concepts, because everything is interacting with itself. That means you cannot get only one part for single alone, yes, because that will not make you profitable. That will give you some advantage on some days, maybe, yes, on some trading sessions. But if you want to be consistent, you need to understand all those kind of concepts, yes, at least a little bit. Yes, I say always the Pareto system, yes, the Pareto principle. You need 20% of the time to learn 80% of what you need. Yes, to get the other 20% to make the 100%, you need much more. Yes, but you need almost with everything only 20% of time to get 80% of the knowledge out of this. Yes, and that is what I would say it's the best motivator. Yes, to study more. Okay, so I will say that was it. So we get here into trades now, and as soon I enter here into a trade, I will explain why I took this, what I looked about, yes, and what the importance is. So, and I see here immediately, yes, let me show you this. I see here immediately something coming, yes. So look at this. Let me first of all stop the video. So we have here that of the market condition. You see here we have here a reversal at the Bollinger Band, yes, in form of the evening star. Then we have here really ranging market. Yes, you see the EMAs are flat. The 200 EMA is flat too. Yes, we got here a breakout. We got here a try of the price to get above this. Here we have a bullish engulfing candle. After this bullish engulfing candle, we got here a reversal, yes, and then we got here a nice bearish candle. The next candle looks like a weak one. We have another 6 seconds, yes, and this wick here is showing me already that we have buying pressure. This is looking like a nice support and resistance level, yes, and that's what I see here immediately, yes, without nothing, only by watching it, yes. Nice bearish strong candle which implicit a downtrend, weak candle after this. What can this mean? That can mean only that this is a fake breakout. This is a fake breakout of the support and resistance level. So let me see what's happening here. And the lower chick bigger than the real body. The lower shadow bigger than the higher. And you see, I enter here immediately into a call because I understood immediately that this is a fake breakout of this support and resistance level. And that's the reason why I have mentioned in the previous video this the importance of the fake breakouts, understanding how fake breakout look like. Obviously, it's not looking like a textbook morning star. Yes, it's a morning star. Yes, you have to understand that low or small real bodies are like dojis. Yes, and yes, and this lower shadow is showing buying pressure. The upper shadow is showing selling pressure. The lower shadow is bigger than the upper, bigger than the real body. Yes, so you have 3 times bullish, only 1 time 2 times bullish, 1 time bearish because the real body is bearish, but it's a weak one. So that is the relation, and that is the reason why I enter immediately without any kind of rejection into a call, because I was expecting that price would go up. So then I'm having the mouse about the higher button already, yes, and then I wait. Look at this, price is going down. Yes, price is going down. I'm still waiting. I'm not entering. I'm waiting. Yes, I'm waiting till I understand what's happening. This was the first movement which was clear to me what's happening. Yes, that was clear. And then I entered. I want to enter earlier. Yes, but it was not possible. And that was this what I had explained over and over again. Yes, price. And that is what you should do. Price retrace back to the support and resistance level. On the move upwards in upper direction, entering into a call, yes, because what we have here, a morning star, the probability that the trend will continue is 75 to 80%, and that's the reason why I enter into a trend continuation, yes. If this candle would not have broken this kind of area, yes, then I would have not entered into a call, yes, because that would have been a sign that maybe a downtrend will continue or that a retracement will appear, yes. That is what you should understand. That is what nobody is telling you, yes, because they always tell you, yes, here candlestick pattern there, and candlestick mass here, and psychology here, yes, but you have to understand what the behavior is. It's the same like humans, yes. If you are talking to a human, humans can talk to you everything. They can tell you everything. Important is what humans are doing, yes, and that is the same. The movement of the running candle is talking, yes, that is the movement of the running candle, wicks, and all those kind of stuff. And that what candlesticks are doing is mostly that what candlesticks closing price. Yes, that is the closing price, and you have to understand this. So this candle is another weak candle, which is showing me again weakness in the market. This candle not even has done a pullback of the. You see, I have done the same thing what I have done on the previous video, and that is exactly I will have to do. So first of all, important is here, this candle touched the 200 EMA. Yes, if this candle would not have been touched the 200 EMA, I would have not entered immediately into a put, or in general into a put, yes, because then it could have been also that price would have done here only a retracement of this upcoming. But this candle has touched the 200 EMA, closes below the 20 EMA, yes. That was for me a sign that we are getting here what? Exactly a pullback. Downtrend, pullback from the 20, highest probability trading setups, which I have explained in the ebook. I have shown you this at the beginning, yes. You have only to get those kind of jigsaw puzzles, yes, these puzzles together to understand what I have done. I have waited that price goes down, yes, and then I waited. I have the mouse on the lower button, but as this price was above the closing price of the previous candle, I entered into a put, yes, because this candle already conquered this kind of area. It was clear to me that price will move down, yes, and that was the reason why I entered above the closing price for the case that price will retrace back to the or above the entry point. And that is what a lot of traders do wrong. Which a lot of traders do wrong. They enter on the first movement because they are not patient enough, they are recklessness, and they are waiting so long for any kind of trading opportunity. And when they see a trading opportunity, they want to get this and they don't want to miss it. And then they enter in the completely wrong because they get then trapped by the market. So, okay, that was already. If you like this video, do a like. If you didn't subscribe to my channel. And if you have something to say, drop me a line in the comment section. So I would say stay safe and bye-bye.